Hello. Can you guys hear me? Can somebody just put in the comment section if you guys can hear me? Hello. Okay. All right, everybody. Good evening, everybody. Hope you guys are doing great. I hope you guys are well kept. I hope you guys had a fantastic weekend. I hope you guys really enjoyed um, your weekend. You had a blessed one, and I hope you had a fantastic Monday, a profitable Monday. It is still Monday. If you are part of our Telegram channel, we did send what you call a what is that, a signal earlier today, this morning, and it is in massive profits. We shorted um, German 30. We shorted German 30, so we were in nice profits over there. We did just over 150 points, if I'm not mistaken, so far. So we definitely had a profitable day. I hope you did too. Welcome to today's live trading session with myself, Isaac Izy. Today we're going to be talking mastering entries, but before we proceed, may I just put a disclaimer out there that any opinion, news, research, prices, analysis, or other information discussed in this webinar or linked to this presentation is provided as a general market commentary and does not constitute as investment advice. And if you are looking for any financial or investment advice, it is advisable that you seek counsel from a regulated entity or regulated key individual with the FSCA. If you're in South Africa, if you are anywhere outside of South Africa, I'm sure you do know what do you call your financial regulatory board. All right, so yes, just wanted to pass that out there before we proceed. And while we are still you know while we're still in our introduction, can I ask for every one of you that is here to kindly please tell me where you are tuning in from, the country as well as the city that you are from. Let me know in the comment section where you are from, in the chat box, where you are from, which country, which city, and let me know if you're a beginner or you've been trading before. If you are new to trading, let me know. If you've been trading, let me know how long you've been trading for. Let's get to know each other. All right, I see Anthony Mandla, I see Kevin Kumbuza, I see Praveen is also here. So yes, let me know where you guys are tuning in from. I'll give you guys at least the next 5 minutes to let me know where you guys are tuning in from, which country you from, which city. Have you been trading before? Is this your first time attending these sessions? Are you new to trading? If you are not new, how long have you been trading? And so forth. Let me get to know you so I know my audience, so I can give you what is important or what will appeal to you. Sometimes I can give you food that it's still food, it's good food, but it doesn't appeal to you. Let's say, for example, if you are vegetarian, and I give you meat, meat is good, I love meat, but meat doesn't appeal to you. So it's important that I know if we have newbies, if we have people that have been trading, so I can give you guys in accord information that will be beneficial to you. So just I don't waste your time, and I also don't waste my time, because I want everybody that is here to actually be a better trader by the time they leave this webinar today. I see we have Iris Leslie all the way from Namibia. Where in Namibia are you from, Leslie? Iris. I see we have Anam from Qatar. We have Charles Peter from Nigeria. Where in Nigeria are you from, sir? Where in Qatar are you from? Are you in Doha? Where are you from? Where exactly are you from? All right. All right. Let me know. All the way from Windhoek. I've been to Windhoek before. Lovely place. Not so different from South Africa. Not so different. I did feel like home. I didn't feel any difference from that. All right. I see Charles Peter all the way from Nigeria. He's a beginner. Babish Gaborone, Botswana, beginner. We have Anthony Mandla from South Africa, Northwestern Brett. I'm a beginner, would like to learn most from this session always. And we have Kevin from South Africa, Cape Town, new, still struggling. All right, most of the people here are new, which is good, because most of the time when you deal with people that have been trading, they have so much information. Sometimes it's just too hard to let go of what they know to apply the new things that they know. So if you're beginners, it's beautiful, because then I can start with you guys and make sure I give you the right information as you grow to becoming a sniper entry agent like myself. They call me Agent 45. I'm a sniper in the market. So that's what I want to turn you guys to be snipers in the market as well. If you are not part of the Telegram channel, I'm gonna put a link in the comment section. Please make sure that you join that link so you're part of the Telegram channel. We share out information, educational content, we share out signals, we share out trading psychology, trading psychology tips every Thursday. So make sure that you're part of that. All right, let's proceed. For everybody that is here, I have good news for you guys. We have 100% bonus promotion for you guys, the people that are attendees here, right? After attending the lesson, use the promo code for 100% bonus to double your deposit and maximize your profit potential. I will share the promo code at the end of this session. I will give you guys, so make sure that you stay tuned till the end of the session to get that promo code, so you can get your 100% bonus. Are we together? All right, let's proceed. For those of you that are here for the first time, joining me for the first time, I see you have Maxwell Shabangu, beginner, still struggling, also from South Africa. All right, don't worry, Maxwell, we got you. For those of you that do not know me, my name is Isaac Izy. I'm a professional Forex trader with 10 years of experience. I am also a professional, or rather an expert in Forex psychology. All right. I'm a founder of the academy called Flexi Forex College, and we have trained over 5,000 students to date. Actually, Flexi Forex is turning 7 years old tomorrow. 22nd August, we are turning 7 years old on the 22nd of August, which is tomorrow. We are turning 7 years old, and we have trained over 5,000 students. We have held more than 300 Forex seminars throughout the Southern African region. We've been to Namibia, Mozambique, Botswana. In Gaborone, I've been to Gaborone. I've been to Windhoek, all these places, and our passion is to provide new traders with proven strategies and empower them to succeed. That's what we do. We want to equip traders with the necessary skills, the necessary psychological tips, strengths to become better traders, not just better traders. We want to train them to become and holistically successful people. All right, that is our passion, and that's what we do. All right, so we're together. Let us proceed. Today, before Mohammed all the way from Pakistan, we have Lerato all the way from South Africa, and Rustenberg, also a beginner. Awesome. Before we begin, I just thought today it would be best if I can give you guys some trading psychology tips that you can apply to your trading. Especially as a beginner, it's important that if you can write these things down so you know what is happening to you at that current moment before we'll get to the technicals. All right, are we together? All right, now tip number 1 is no loyalty is a good trait. Now, what do I mean by that? No loyalty is a good trade. When it comes to Forex trading, one doesn't need to be loyal to their setup if the market is telling you otherwise. All right, you do not need to be loyal to your setup. What do I mean? For instance, you come to the chart and then you analyze, let's say Nasdaq, and then you are anticipating a bullish movement, and now the market comes back and says, you know what, we are going bearish. But because you are so attached and you are loyal to your analysis, you still want to force the market to buy, although the market is telling you that it's selling. So you don't have to be loyal to your setups. Write this down so you can remember it. The number one trick to master trading psychology is to be aware. All right, is to be aware of what is happening to you at that current moment. If you are aware, you are able to overcome that obstacle. If you are not aware of what is happening to you, then you will fall victim to these demons of trading emotions. All right, so number 1 is no loyalty is a good trait. Don't be so obsessed with being right. Your job as a trader is to make money, is not to be right. Right, as they always say, it's not more about whether you are right or wrong. It's about how much you make when you're right and how much you lose when you are wrong. Make sure that you don't stay loyal to a setup. All right, number 2 is you need to seek quality over quantity. I always say, just because the market is moving doesn't mean you should be trading. Just because the market is moving doesn't mean you should be trading. You should be patient enough to wait for those quality setups that will pay you over time, as opposed to going in and out of the market all the time and end up blowing your accounts or end up not even making any profit. That is wasted effort. All right. Psychology tip number 3 is when you are in doubt, do nothing. When you are in doubt, do nothing. I want you guys in the chat box to let me know if this has happened to you before. All right, if this has happened to you before. All right, so let me know. All right, you were analyzing the market, you were not sure if it's a bullish or it's bearish, but you just had so many doubts. But because you wanted to trade, you just ended up maybe saying you're buying the market, and the market went against you, and you were like, you know what, I actually knew it. I wasn't sure about this trade. Let me know if this has happened to you. I know it has happened to me, which is why I've figured out that whenever I'm in doubt, I must do nothing. Because if I do something and I enter a trade, I'm always in a losing position. All right. Whenever you are in doubt, do nothing. Let me know if that is you in the chat box. Let me know. All right. Let me know. Let me know. Number 4 is never hope for an outcome. Never hope for an outcome. Never hope for an outcome. All right. In trading, we don't hope for outcomes. All right. Trading is a game of probability and not certainties. All right. What a lot of traders, the mistake a lot of traders do is they come into the market with the hope of an outcome. All right. I have rent that I need to pay at the end of this month. So I'm hoping to make $1,000 from this trade. No, you don't do that. You let the market decide how much it's going to give you. All right. You don't come here with hope for an outcome. Or you analyze and say, you know what, I hope I am right. This thing is going to buy. No, no, no. We just always follow the market. So we don't follow, always and blow the account. Exactly my point. So again, whenever you are in doubt, stay away from the market. All right. All right. Are we together? Are we together? So now, remember this, and this is in line with what I've said, the previous one. The market is always neutral, right? The market is always neutral. I've often had people saying, no, the market makers manipulated me, or the broker manipulated me, or wara. Understand that the market is always neutral. The market doesn't know you. They don't know you. The market makers don't know you. Who are we with our small accounts when these people are trading big accounts like that, Our small accounts literally mean nothing. It's just for us to take whatever we can get from the market and understand that the market is always neutral, all right? And if the market is always neutral, that means you must also be neutral. You must also be flexible, all right? You must be flexible as a trader because the market is always neutral. All right. And the second, the next one is you need to take responsibility for everything, right? You need to take responsibility of every trade, of every outcome. Whether it's a take profit or whether it's a stop loss, you need to take responsibility of that. It's in line with what I said. The market is always neutral. So you never shift blame to the market makers. You never shift blame to the broker. You take responsibility for all the outcomes. Why? Because whenever you're taking responsibility, you're opening up yourself to learning and growing. But whenever you shift responsibility, you can never grow out of the level that you are in because you don't think that you deserve to grow, or you don't think you need to grow because it's not your fault. You are perfect. There's something wrong with the market. It doesn't work like that. You take responsibility for every outcome. All right. Next one is always let the market make the first move. All right. We are traders. What we do is we follow the market. We don't dictate the market. We follow. All right. So you always let the market make the first move and then you follow what the market is telling you. All right. Another one, second to last, it's my favorite one, is find a trading style that best suits your personality. Find a trading style that best suits your personality. I always say he who masters himself can master trading. If you know and you are self-aware of what type of an individual you are, your personality, it's easier for you to find to master the market. Right? I'll give you an example. Like myself, I'm not a very patient person, so I know that about myself. So I stay away from long-term trades. I stay away from swing trades. I do intraday trading because I don't want to go to bed not knowing how much I've made for that day. No. So I only take short-term trades because I know that about myself. And I also know my risk appetite. I know there's a certain level of losses that when I get to that threshold, I start losing myself and I act out of character. So what do? I do not allow myself to go over that threshold when it comes to losses. Why? Because I am aware of myself. I know if I go over 50% of my trading account, I start going crazy. So I never allow myself to be in that position, so I can always make sound, sober decisions when it comes to trading. So you must do that as well. Find a trading style that best suits your personality. All right. Just because Isaac trades like this doesn't mean that's the only way to trade. There are many concepts, there are many strategies, there are many styles of trading that do work. You need to find one that works for you. I have found my niche. I know what works for me. You also need to do the same. All right. The last one is love the game and not the money. A lot of people come into Forex trading because somehow they believe that trading is the last option or is the cheap way out, the easy way out that doesn't require hard work, that doesn't require any qualification whatsoever, and also because people have sold this idea of Forex being the easy way out. I can tell you right now, it's not. It's just like any other business, it's just like any other profession. You need to be passionate about it. You need to love the game, and once you love the game, the money will come. All right, you need to love the industry. You need to be passionate about trading, because once you're passionate about something, you're always looking for ways to learn, to improve. It's not just about the money, it's just what you do and what you love doing. So make sure that you love the game and not the money. All right, money is secondary, love the game, and once you get that right, the money will just follow. All right, are we together? Great. Let us proceed to our trading strategy for the day. If you were here last week, we discussed another trading strategy. All right, we discussed another trading strategy. Today we're gonna be talking about yet another trading strategy that you can use to trade. All right, especially if you are a beginner. These are like basic concepts that you need to familiarize yourself. These are like the foundation of Forex trading. Once you master these ones, Forex trading becomes easy for you. All right, okay, let me not use the word easy, but it just becomes normal. It just becomes normal to you. It's more understandable once you understand this concept. So today I'll be talking about understanding chart patterns. I'll be talking about reversal patterns. I'll be talking about understanding trend lines, and then we're gonna talk about using trend lines with round numbers. If you were here last week, we discussed round numbers. All right, so yes, we will we'll combine that so we can find a confluence and get better entries. All right, I'll just take my glasses off there a bit. All right, are we together? Are you guys still with me? If you're still with me, please give me some fire emojis in the chat box. Give me some fire emojis in the chat box if you're still with me. All right, all right. I've blue man up my account on multiple occasions because I was in doubt and I still trade. My point exactly. Don't trade when you are in doubt. All right, now let's move on. Let's move on to our strategy for the day. Can I see some fire emojis in the comment section? Can I please see some fire emojis in the comment section? Can I see some fire emojis? I need some fire emojis. I need some fire emojis. I need some fire emojis. Keep me warm. All right, now chart formations. All right, understanding chart patterns. Chart formations will greatly help us spot conditions where price is ready to break out in a certain direction. All right, they can also indicate whether the price will continue in its current direction or will price reverse. All right, in a nutshell, chart patterns help you answer these three questions. Question number one is, how do I find potential entry points in a rising or a falling trend? All right, how do I find what? How do I find a potential entry point in a rising or a falling trend? Number two is, how can chart patterns offer potential entry signals? How can chart patterns offer potential entry signals? And number three is, how do I know when to get out? The exit signals, either to take profit if the chart pattern worked out, or to cut my losses if the chart pattern failed. All right. So this is what chart patterns will help you do. All right, we're together. Now let's talk reversal patterns. All right, reversal patterns are those chart formations that signal that the ongoing trend is about to change course. It's about to change direction. All right, if a reversal chart pattern forms during an uptrend, it hints that the trend will reverse and that price will head down soon. Conversely, if a reversal chart pattern is seen during a downtrend, it suggests that the price will move up later on. Are we together? All right, now moving forward, I'm going to show you guys some few reversal chart patterns that are common to traders. These are not the only ones, but these are the common ones. All right, so we're going to discuss the double top, we're going to discuss the double bottom, we're going to discuss head and shoulder, and we're going to discuss inverse head and shoulder. Make sure that you join us in September. I think it's on the 4th. If not, I can't remember. We're gonna discuss more of these patterns as well, but we do have live trading sessions, so make sure that you stay tuned. All right, now let's head on to our double top. All right, a double top pattern. All right, I do apologize for that. I am still a bit sick, so do forgive me if my voice doesn't sound so well. All right, a double top reversal pattern that is formed is a reversal pattern that is formed after an extended move up. All right, a double top is a reversal pattern that is formed in an uptrend to signal a reversal into a downtrend. All right, so what happens is we are in an uptrend. There are two peaks or two tops that are formed. All right, and the market will hit that certain resistance and fails to break it, so we'll be in an uptrend going up, and we'll get to a resistance level. The market will form a top and it will go down to create a neckline, come back to around the same area to create the second top and fails to break it twice, and then it will go down. What we need to do is we need to wait for the break of the neckline and the retest so we can enter the sell position. All right, this can be used in confluence with support and resistance, can be used in confluence with other chart patterns. It can also be used with the round numbers, as we discussed last week, of which I will show you before we end the session, and we will do some practicals, see if we can get some nice entries today and take it from there. All right, so what will happen again, if we are in an uptrend, the market will hit a resistance there, fails to break, come down, create a neckline, go back up again to the same zone, fail to break it, come down, and then break the neckline. And then, as we can see with this example there, the market broke the neckline and then it dropped significantly. All right, now, so what you need to know is, again, you need to place your entry below the neckline after the neckline has been broken, and how you can calculate your take profit and your stop losses. You can put your stop loss above the tops, and you can calculate the distance from the neckline to the top, and you can use the same distance as your or the same points or the same pips as your take profit. Are we together? Now your stop loss needs to be above. Most of the time, if you see this on a higher time frame, it will be a major drop, but you can use this as your TP1, or you can use the round numbers, of which we will get to that. Do we understand what double tops are? Let us move on to double bottoms. Now, double bottom is a trend reversal formation that is formed in a downtrend. It's basically the opposite of the double top. A double bottom happens in a downtrend. What happens, we are in a downtrend, the market gets to a support area, all right, fails to break, and then it creates the first bottom, goes up, and then comes back again to the same zone, creates a second bottom. Market will go up, it will break the neckline. Once the neckline is broken, we know that there is a potential reversal. Then we can enter our buy entries all the way up. As you can see what happened there, the market went down, came back up, went down again, failed to break the area, broke the neckline, and the market shot all the way up. Do you guys understand double bottom and double top? So we're gonna get to the chart and I can identify them for you. Let's quickly do that. Please advise if you can see the chart. Please advise if you can see the chart. Please advise if you can see the charts. Right. Yes, the charts are visible. The charts are visible. All right. Let's look at Nasdaq. Let's look at Nasdaq, for instance. We're gonna try and find a double bottom. We're gonna try and find a double top. Already here I can see we have a head and shoulder, inverse head and shoulder, of which we're gonna get to it. Let me see if I can find a nice visible double top. All right, here's one. Here's one. I'll show you just now. Right, you can see over here. So we had let me do this. We had a top there, and then we had another top there, and then we had the neckline being broken and tested, and the market went all the way down. You guys see that? So we were in an uptrend, the market created a top, another top, broke the neckline, came back to retest the neckline, and we dropped all the way. Do you guys see that? Do you see when I say these things work? Do you guys see? If you understand and you see it, please go onto the chat box and give me some dollar emojis. Give me some dollar emojis, not fire emojis. I need dollar emojis right now, because we are now making money. We are now making money. We are now making money. All right, we are now making money. We are now making money. We are now making money. So I need dollar signs. I need dollar signs. Dollar signs. Look at those dollar signs. Let's see the dollar signs. Let's see the dollar signs. Let's see the dollar signs. See the dollar signs. Let's see the dollar signs. Right. So over here, oh, here's a nice double bottom there. Right. So we see we were in a downtrend. The market came, created a bottom. All right. Market went up, created neckline. There was a neckline over there. The market came, created another bottom. All right, and after this bottom, the neckline was broken, retested, and we shot all the way up. Easy money, easy money. Do you see that? Easy take profits. Easy take profits. If you're taking that trade, imagine with Nasdaq, let's see how many points you would have been up. You have been about 1,800 pips. 1,800 pips. See how cool that is. Once you master these things, it's so easy. And then here we have like a nice head and shoulder pattern there, which we will get to it. I'll explain to it. So you guys understand, we have a nice inverse head and shoulder there, and then the market shot all the way up. Right. We have another double top there. Market broke neckline, the market shot all the way down. Do you guys see that? You guys see that? How? Forex is nice if you understand it. Forex is not complicated if you understand and you keep things simple. All right. Now let us move on to our head and shoulders. Let's move on to our head and shoulders. All right, now a head and shoulder chart pattern is a reversal pattern and most often seen in an uptrend. It is formed by a peak or a shoulder, all right, and then followed up by a head, all right, and then it is followed by another shoulder, all right, which we call the right shoulder, and then it will break the neckline as well, retest and drop. All right, so we are in an uptrend. We'll create a peak, then we'll drop down slightly a bit, break this peak, create another top, come back down again. However, we don't go back to that top. We create one more or less at the same level as the left shoulder, and then if we break the neckline, then the the head and shoulder is valid. Once that is broken, the market shoots all the way down, as we can see on the chart there. On this example there, we were in an uptrend. A shoulder was created, a head was created, a shoulder was created, the neckline was broken, and then we dropped all the way down. All right, that is what a head and shoulder is. It is found in an uptrend and it signals a bearish reversal. It signals that a bearish movement or the sellers are about to take over. That's what a head and shoulder is, of which I will show you on the example again. And then we have an inverse head and shoulder. Inverse head and shoulder is just the opposite of the head and shoulder. This now happens in a downtrend. You are in a downtrend at a support area. The market creates a shoulder, goes back up again, breaks that low, creates a head, goes back up again, creates around the same price as the neckline, and then it creates a shoulder. That's what we call the right shoulder. And then once we break the neckline after the right shoulder, the market shoots all the way up. All right, as we can see, in this example, we had a shoulder, a head, a right shoulder, market broke, and it shot all the way up. That is what an inverse head and shoulder is. It is a reversal pattern. All right, it's just a head and shoulder. It's just a head and shoulder, that is upside down. Now let us go into our chart and look at let us now look at why is my chart not open? Let's look for a head and shoulder or inverse head and shoulder, and then we can, so you can see how it works. All right, just off the top we can see right here. All right, we were in an uptrend. All right, and then let's look for a shape, rectangular shape, and then we created a shoulder over there. The market broke this and created a head over there, came back down, created another shoulder, and then this was broken. All right, this neckline was broken, and the market shot all the way down. All right, do you guys see that? Market shot all the way down. Let's look for another one that is more visible. All right, looking for a nice one that is more visible. Let's see, head and shoulder, head and shoulder, head and shoulder. Let's look for a head and shoulder. Let me see here if there is no inverse head and shoulder. This you'll usually find at the end of a trend, either at your support area, either at your resistance area. Let's see if this one is more visible. I'm looking for an easy one that you can be able to spot. So next time you see something like that happening on the charts, all right, remember it doesn't always have to be perfect. All right, it just needs to adhere to the rules, and then we can get to it. All right, okay, let me see here. I think I see another one here. All right, this one I think it's slightly visible. Where was I? Okay, there is one here, however it is more or less like combined with a double top. All right, so as we see over there, we had a shoulder. All right, and then we had a head, then we had a shoulder there. Then you can also use that as a double top. All right, but this really just a signal that the neckline was broken, the neckline was tested, and the market went all the way down. All right, now I'm looking for a more clearer one so it can make sense. Maybe let's check another pair. Let's look at US 30 so I can show you guys just a nice head and shoulder and what happens when a head and shoulder occurs. Right, I see more double tops and bottoms. Head and shoulders are there, however they are not that visible, so especially for the beginner guys, I don't want to confuse you, so hence I'm looking for a clearer one. All right, so I'm looking for a clearer one. Let's see that one there. Do you guys understand head and shoulder? Do you guys understand head and shoulder? I'm trying to see. There is one here. We see that there was a shoulder there, a head, a shoulder. Market broke the neckline, and we dropped all the way. Right? Market broke the neckline, and we dropped all the way. Do you guys see that? Do you guys see that? Let me look for an inverse head and shoulder so you can see the opposite. You can see the opposite. You can see the opposite. Right, all right. Inverse head and shoulder. You guys see that whenever you spot any of these chart patterns, it's just easier to see what's going to happen next in the markets. All right, here is one there, even though it's not that clear. Here's an inverse head and shoulder, even though it's not that clear. All right, so we have shoulder there, head, shoulder. Market broke the neckline, shot all the way up. You see that? Market broke the neckline, shot all the way up. Are we together? Are we together? All right, we have another one here, but these ones are not so clear. But if you understand, as I said again, it's more about the rules. We create a top, we create a bottom, then another low, then another shoulder, then we break the neckline. Once the neckline is broken, neckline is tested, and we shot all the way up. Do you guys see that? If you understand, can I get some fire emojis? Can I get some dollar emojis? All right, can I get some dollar emojis? Can I get some fire emojis? All right. As we can see here, there is a possibility of a double top, a double bottom, right? We have a bottom there, we have a bottom there. If the market breaks the neckline over there, then we know that there is a possible move to the upside. All right, there is a possible move to the upside. All right, are we together? Are we together? You guys understand? All right, moving on. Let's move on to our. Now let's go understanding trend lines. All right. Now, I want you guys to understand that trend lines are the most common form of technical analysis. All right, in Forex trading, these are the most common form of technical analysis tool in Forex trading. They are probably one of the most underutilized ones as well. All right, if drawn correctly, they can be as accurate as any other method. Unfortunately, most Forex traders don't draw them correctly, or they try to make the line fit the market instead of the other way around. All right, in their most common form, an uptrend is drawn along the bottom of an easily identifiable support areas. All right, as you can see there. In an uptrend, the trend line is drawn below the candlesticks. All right, it's drawn below the candlesticks, and then in a downtrend, it's drawn above the candlestick. And it must connect between two or more. What word can I use that beginners will understand? All right. What word? I'm trying to figure out a word that I can use that beginners. 2 points. Let me just use 2 points. You see, there's 1 point and there's another point. We need a minimum of 2 points. All right, for the trend line to be valid. All right, are we together? So in an uptrend, the trend line needs to connect between higher highs. All right, and then in a downtrend, it connects between the lower highs. All right, and in the sideways trends, obviously it will be your support and resistance at the top and the bottom. All right, are we together? Do you guys understand what trend lines are? Trend lines are just basically used to identify what trend we're in. If the market breaks out of the trend line, there is also another that is a signal that the market might just be reversing. Are we together? Now I'm going to draw trend lines so you guys can understand. All right, let's quickly go to the charts again. So I can draw a trend line. Let's go to Euro USD. So again, remember I said your trend line needs to connect between 2 points. All right. Okay, that is not valid. So this one will be our valid trend line because it connects 1, 2, and it's still within that range over there. Let's try another trend line over there. Connect 1, 2 points. All right, and then there we go. Are we together? That's how you basically draw a trend line. You just need to connect between 2 or more points. You guys see that? We have that there. Let me just remove this one here. Let me remove that one there. And then the trend line was broken here. All right. So 1, 2, 3 points, 4 points. The market tried to break out. Eventually it broke out, tested, and the market went all the way down. It means the market has broken out of the uptrend into a downtrend. All right, similarly, something that we can see over there. Like I said, these are the most basic rules basic forex trading rules that one can use. Let's look at that. The market was just playing below this line, and eventually when it broke out, just came and tested. What did it do? It shot all the way up. How amazing is that? How amazing is that? Now you just need to understand it's not just about drawing the trend line. There are other things that you must pay attention to. All right, connect to one point. Yes, don't forget to join the South African Telegram channels. Make sure you do join that so you can get all right. So over here we see that the market broke to the side, tested the trend line, and it went all the way down. How cool is that? How cool is that? All right, see, same thing here. You see that in an uptrend, market broke. We have 1, 2, 3 points. The market broke, tested it, and eventually went down again. So that's how you draw a trend line. Do you guys understand how to draw a trend line? This is an uptrend trend line, and then that's a downtrend trend line. It's as simple as that, man. And if you understand, and these are just in your face. These are just in your face concepts. They are there. They are there. And if you use this with confluence with the other methods that the other chart patterns that we discussed, with along with support and resistance, along with any other any other concept that you use, these things work for you. All right, they make your trading easier. They can confirm quite a lot of things as well. All right, so we have a first touch, second touch. Let's say we bounce off somewhere there, and then we can drop all the way. All right, does it make sense? Does trend line make sense? Before we proceed, we're gonna get to the juice now. So please let me know if they make sense. If you understand double top, double bottom, if you understand if you understand head and shoulder and inverse head and shoulder, if you understand what is this thing called? Trend lines. Let me know if you understand in the comment section before we go to the juice. I'm gonna give you just a nice strategy that we can use to determine to get those sniper entries. We're gonna use trend lines in conjunction with with the round numbers that we used the other time. All right, are we together? Are we together? Guys, let me know, communicate, talk to me. I'm waiting for fire emojis. I'm waiting for I understand. I'm waiting for yes, say I don't understand. I'm waiting for can you explain a bit more. I'm just waiting for communication. So talk to me. All right, talk to me. We just spoke about an inverse head and shoulder. Just look at that there. I just see it now. Man, I should have taken that trade. However, if you are in the Telegram channel, I did send this buy when it was here at the head. Now it was just confirmed with that. All right, so we have a shoulder there, we have a head, we have a shoulder. The signal was sent around about here, a buy signal. All right, and then we killed it obviously. I mean, look at the points, right? From 4,580 all the way up to 414. So it's about 300 points or so. That was good money. That was good money. Good money. Yes, about 300 points or so. It's about 300 points or so. So we did share this trade. We called out this trade on the Telegram channel on Friday. All right. So make sure that you do join the Telegram channel and you do not miss out. You do not want to miss out. All right. You do not want to miss out. Are we together? All right, understood. Very clear. Perfect. All right, now we are going to using trend lines with round numbers. Are we together? All right, using trend lines with what? Round numbers. All right, now this is a step-by-step guidance, all right, for beginners. Even if as an advanced trader, you can use this because it's so easy, all right? So trust me, it's straightforward. Number one is you need to zoom out. See, please make sure that you write down everything or take a screenshot of this, because once you apply this step by step, by next week, you'll come to me and say, Isaac, I've had the best profitable trades I've ever had in my life. All right. Step number one is you zoom out completely on a higher time frame to see the bigger picture of the market. On a 4-hour or a daily chart, you just zoom out completely. You want to have a nice view of the charts. You zoom out completely to see the bigger picture. All right, number two is you identify your trend. This is important. You identify your trend. All right, once you identify your trend, then you will know what opportunities you are looking for. Either you are looking for a sell or you are looking for a buy. That will be determined by the current trend that you have. All right, number three is you need to plot your highest point, of which I'll show you. Then you plot your lowest point, and then you start between your low point and your high point. You start plotting round numbers between the highest point and the lowest point. The high point and the lowest point is just basically the beginning of a trend and the end of a trend, all right, of the full trend, where it started and where it ended. All right, and then you just plot your round numbers, your double zeros and your triple zeros between those two high points. All right, another step is you need to understand that every consolidation or every pullback is an opportunity to enter a trade if it happens near a if it happens near a round number, then you know it's a full confirmation. But also a consolidation is an opportunity to enter a trade. You enter your trades at the breakout of the trend line. Once a trend line is broken, you enter your trades. And another entry point is entry on breakout and retest of the trend line and the RB numbers. All right, entry on the breakout and the retest of the trend line and the round numbers. Now let us quickly before we get to that, let's quickly go to I see someone here is saying we must look at gold. I like looking at Nasdaq and them, but let's just quickly go to gold. Let's give the people what they want. XAU, where are you, gold? Where are you? XAU USD. There we go. Let's open up a chart and let's do that. I really don't like trading gold, but I'm just gonna show you what happens. All right, so now we can see, based on the strategy I said, rule number one is you zoom out completely. Let's go on the H4 chart. You zoom out completely to see the bigger picture of the market. My nearest high point is that one over there. My nearest low point is that one over there. And I can also even take this one there, but as we can see, this one has been broken into, but we'll look at this too. And as according to trend line rules, this has been broken and we are now in a downtrend. All right, so two things are going to happen here. Either the market needs to come all the way down there, of which I highly doubt, or where we are, we just need to go all the way back up to that price over there. So we're going to draw another trend line over there. Actually, as we can see, this trend line has already been broken. All right, let me just use that there. All right, or let me just use this points there to draw the trend line so it easily connects. All right, we can see that one has been broken, but the market came all the way down there. All right, so now let's also draw another trend line from there up until, yeah, gold has been melting, eh? Yes. Let's go on a smaller time frame. Let's see what is happening. Gold has been melting so much. Should start going up on gold now. Have a triple bottom there. Triple bottom. All right, came back. All right. Now let's analyze. Zoom out completely. We've identified the trend. We are in a downtrend, so we are anticipating a reversal. All right, we are anticipating a reversal in that area there. Let me just use this as my low point. No, let me just use the line. Let me use this as my lowest point. Currently, we are in a downtrend. The market is in a downtrend. We've identified that. We've identified our low and our high. Let me use this one as a high as well for the purposes of the strategy. All right. So now, what we need to do, as I said, we need to identify our round numbers between the high and the low. All right, we need to identify our round numbers between the high and the low. We've plotted our high, we've plotted our low. Are we together so far? Now plot the RB numbers between your high and your low. My RB number, double zeros. From here we have, it's 1884, so we have 1900. We have 1900, and then we have 19. Let's do a 1950, because from here we basically should be going to 2000. But let's use 50s for the sake of gold. All right. Let's use a 1950. All right, so this are our major RB numbers or round numbers. All right, and then obviously we're gonna have but in between this, let's use maybe tens. Should we use tens? Yeah, let's use tens. I think it will be enough pips. Let's use tens. So we'll use 1910, and then we'll do 1920. Let's do 1920. You guys, for those of you that were here last week, do you see that even the tens, they work? All right, 1920. Let's do 1930, so we can get more opportunities. All right, 1930, and then let's do 1940. Okay, 1940. And then we have 1950. All right, 1950, and then we'll do 1960. Remember these numbers, whenever you see them, just know that the market is going to react. Either it's going to break and retest, or it's going to reverse. But most of the time we are looking for reversals because we want to trade in the direction of the trend. Does that make sense? Does it make sense? Let's go to 1980. All right, so far does it make sense? So far does it make sense? All right, and then let's maybe just over here and go 1890. 1890, and then 900. All right, so far so good. So far so good. So now you've identified, you've plotted your round numbers, you've identified the trend. So we are in a downtrend, so there is a potential of a reversal here. Then we are looking for the push to the upside. All right, so what we need to do is we need to wait for, let's draw our trend line, the break of the trend line to confirm. All right, we need to confirm our break to the upside. Right, once the market is broken, this retested it, and then we enter our trades. All right, let's draw another trend line in there. Guys, can you hear me? Can you hear me? Can somebody confirm? Guys, can you hear me? Okay, great. I'm audible. Can you hear me? I do apologize on that. We just had load shedding in South Africa. We just load shed, so they was waiting for the generator to kick in. Now the generator is back. As I was saying, as you can see over here, one, we have a triple bottom, of which I didn't tell you guys about, but we have a rejection over there where the price failed to break this price over here, and then now we have a break to the upside of the trend line. So once we get a retest, a pullback to our RB number, we could take, this is where I'd say we can take our buy price, our buy, what you call our buy entries on gold. Can take our buy entries, then you can either have your take profit at the 1900 price or 200. If we break this main trend line, then obviously we are 1920 or so, and then you can have your stop loss just below this price over here. All right, can you guys hear me? Okay, reconnection successful. Okay, so now let us just go into history and see if this actually does work. All right, let's just go into history so we can back test a bit. All right, we see here we were in a downtrend and the market broke the trend line, retested it. Now where was your entry going to be? All right, this was a downtrend. If you're doing a buy entry over there, it means after the break of this trend line, you are going to take your entry over there. This is where you're going to take your buy entry. All right, this is where you're going to take your buy entry. Now there was a bit of a drawdown there, a bit, but the market eventually respected and came back all the way up. Things like this do happen. All right, so now again broke. Remember the rule says enter on breakout and retest of the RB number. Now market broke this, retested it, you enter your other entry over there, you take your other entry over there. Market shoots all the way up, breaks this. If you go on a smaller time frame, you can basically get a retest over there. I'd say you would take your other entry. There was also, remember I said there's another pullback over there. So this was broken, that was broken. It's a confirmation. We go all the way up. This was broken. All right, this was broken. Once this is broken, the market consolidates a bit. But if we put our trend line over there, the market breaks that. This was retested. That is an entry as well. All right, remember retest. No, not shapes. All right, this was retested, you enter there, the market breaks this, comes back here, retested, you take your other entry over there. All right, you take your other entry over at that price. This was broken, tested, you take your entry over there again, take your entry over there again, all the way up until we get to that high point over there, of which if we go previously, we'll see that this was our previous previous high point was there. However, the market failed to break this area. As we can see, the market has been failing to break this area. Once it broke to the side, it has failed to break this area over there. Let me just quickly add a triangle over there, a rectangle over there. We see that price has been failing to break this area over there. Oh, what did I do now? See, do you guys understand what I mean? Do you guys understand? Do you see what I mean? And price has failed to break this area so many times, and it always reverses this. So that basically that means it's a strong level that market fails to break. And then yeah, does it make sense? Does it make sense? You see how many trades you would have had on the break of that trend line over there, or somewhere there, right? Correct. So you had your first entry, 3, 4, 5, 6, 7 entries. You would have had 7 entries, and in total you would have banked about 600 points. About 600 points. Isn't that dope? Isn't that dope? You guys see that? And the same thing over here, if you were taking the cells, all right? So now we're just gonna wait for an entry. So if you're taking the cells, you wait for a break of the trend line, broken, you take your entry, break of that, what do you call? A break of that round number, then you take your entry over there. This is where you'll be taking your entries, your sell entries, and then you take your sell entries over there at that break. Then you take your sell entries over there at that break. And also remember, these pullbacks, they are also breaking their trend lines. They are also breaking their trend lines. So you'll be taking more trades on that as well. Or if you want, you can just take your trades on the what do you call, on the RB numbers. So this is how you catch sniper entries, guys. This is how you catch sniper entries. This is how you catch those sniper entries. Do you see that? Are you guys with me? Do you guys have any questions? Do you guys have any questions? Any questions? Do you guys have any questions? So we are anticipating a buy on gold. This is where I would say our entry should be. If we don't come back here, it means we break over to the side and come back and retest. This is where we would take our entries, and eventually we'll break our main trend line and shoot all the way up. All right. Okay, so best to zoom out on H4. Yes, you can use H4 or a daily chart. H4 or daily. H4, I just prefer H4. All right. Do we have any questions? More accurate on H4? Absolutely, I agree with you. I get more accuracy on H4 as well. All right. Do we have any other questions? So this is what we are anticipating now. All right. Okay, guys, as I said, I'm promising you that you will get 100% bonus. Now it makes sense with the charts. Exactly. That's what we want to do. So now we go and practice. And remember, practice makes perfect. And once you've mastered it, it's easier for you to get those sniper entries as well. All right. So now the what do you call, the promo code to use for you to get your 100% deposit bonus is Isaac EDU. Isaac Edu, as you see it like that. This is valid until the 31st of August. So please make sure that you use that. If you're funding with $1,000, then you can get $1,000 of bonus. All right. So that's it from me, guys. I really do appreciate you guys being here with me today. I really appreciate it. I hope you learned something. If you learned something, please throw in fire emojis. Show fire emojis, money emojis, so I can know that you learned something. If you have any question, you can ask, and then we'll get to it. Please make sure that you give us feedback on today's live trading session, so we can know what to do better next time. All right, remember your feedback is important to us, so let us know what we can do better, what else you would like us to include in the sessions, so we can always give you guys what you want and what you guys are looking for. All right, that's it from me, guys. I really appreciate it. I hope you guys looking forward to the next session. Thank you, Maxwell. The next session will be on, let me just confirm, on the 4th of September, as well as on the 18th of September. 4th September and 18th September, we're gonna be having another session, but there is sessions pretty much every day on this YouTube channel. Make sure that you tune in and learn other concepts as well, so you can find one that works for you. All right, so for me, guys, that's it. I really appreciate you guys. I wish you guys all the best in your trading journey. I love you guys so much, and may the good Lord bless you, and I pray that you become the best trader your country has ever seen. From me, Isaac Izy, I am signing out. I am out.